Time now for a new segment called Frostbite, where we look at the key soundbite from the day. JP Morgan CEO sitting down for an exclusive interview with CNBC overnight in India and talked about recent volatility in emerging markets, saying it could actually present an opportunity.
I'm not really concerned. You know, you have, first of all, put Turkey and Argentina aside, where I think you have very serious issues. The rest of the emerging markets are actually doing quite well. And, you know, America's gotten stronger. The dollar's gotten stronger, but that's actually good for the world. The world is actually growing quite healthily. And so the emerging markets, they're going, it's just more like a teething pain. And you're absolutely right, they're not all the same. I don't even think they should be called emerging markets anymore, to tell you the truth.
So Dimon specifically calling out Turkey and Argentina, which have both seen wild swings in their currencies over the past few months, of course. However, Turkey has taken steps to rebuild confidence in its currency. Today, Turkey's finance minister announced new austerity measures, including plans to cut public spending by nearly $10 billion. If we look at the currency, Sarah, over the last 2 weeks.
What did he say, teething pain?
Teething pain, yeah, I like that.
That's brutal, teething pain.
That was included in the first Frostbite. Let's have a look, though. There's the currency over the last 2 weeks. So the currency has gained 1% today. It was moving intraday around quite a lot, but it looks like it's settling for the day. Turkish lira up 1%, US dollar down 1%. That's what that chart's showing. And 10 days ago as well, you can see a decent move when they increased interest rates by 6.5% to 24%, sorry, 6.25% to 24%. But it just shows how big and how tough a challenge they have if all they've gained from the massive year-to-date fall is about 6% over the last 2 weeks.
But largely what Dimon is saying is right so far, and we're seeing U.S. record highs to prove the fact that it does seem isolated. But I think what all investors are trying to figure out, and it has been the question all along, is this a textbook emerging market crisis, which we have seen in history? It can be slow motion and it can spread, or is it going to be isolated to really the weak links, Argentina and Turkey? And is Dimon going to be proven right so that some of the rest of emerging markets actually look quite strong, and it's good for the world that the money is flowing in the United States? I think that's one of the debates. So far, the market is backing his argument.